Well, good morning. Welcome back to the Junius Malpe channel. As we get our feet back underneath us, knock the dust off. It's been a while. Yeah, we did the last video. I'm still getting into the groove again. But here we go. We're going to start off just looking at some morning numbers, what's going on. We've got the Dow down, and we've got the S&P down, the NASDAQ down. We've got gold up about 550 up to 1246.90. It's been, from what I've seen, kind of hanging out in that range for a little while now. And silver sitting there right below 15 at 1470. I had dinner last night with a friend of mine who's actually a financial advisor. And we discussed certain things here, such as the 10% down. The markets are sitting approximately 10% down from their highs, entering what some might consider a correction territory. I think it's going to go a little bit further. Some think it could go a lot further. And there's other factors, we discussed in the last video. Housing slowdown, housing becoming a little more stagnant. I saw an article this morning while I was perusing things and wasting time trying to find information that housing has peaked in the certain parts of the United States, some of the high value markets like Los Angeles and New York. That's what it said anyway, peaked. So when something peaks, I'm assuming that means it can only go in one direction from that point. We will see. Americans more worried about the economy as ominous sign for Trump's re-election. Doesn't bother me. I don't care. Again, I'm not part of this whole political WWF wrestling scheme. It's all smoke and mirrors. There's some articles out today also about the Russians. The Russian thing just doesn't go away, doesn't die. They'll talk about that to the end of time. The U.S. meddles in elections around the world. Russia, maybe they made some Facebook posts or something. It's one of those topics that's, to me, quite pathetic. And I avoid the discussion of it because it's that pathetic. We'll move on to look at some information regarding gold. I know a lot of you contacted me. We're very excited to see it. The most boring channel on YouTube is tentatively and somewhat back. And we're requesting some gold headlines, gold discussion. And that's my favorite metal to talk about. So let's get into it. In order to set the mood, light the candles for a gold discussion, you've got to talk about the U.S. debt. Now, it's nearing $22 trillion, and there are storm clouds, in quotations, indicating, quote, another financial crisis. The rapidly exploding U.S. national debt is about to cross another critical threshold. This is from our friend Tyler Durden. Many of you are familiar with this author, his pen name. According to the U.S. Treasury, the debt of the federal government is currently sitting at $21,854,296,172,540. And of course, 94 cents. That's really important there, the 94 cents. And at our current pace, we will likely hit the 22 trillion mark next month. This is a country that gives away billions in foreign aid every year. Ponder that. Now, this is a horrifying national crisis, and yet nothing is being done about it. When Barack Obama entered the White House in January of 2008, the U.S. was $10.6 trillion in debt. And so that means we have added $11.2 trillion of new debt to that total in less than 11 years. Seems like yesterday. Crazy. Time flies when you're going into debt. Needless to say, it doesn't take a math genius to figure out that we have been adding an average of more than $1 trillion a year to the national debt for more than a decade. But instead of getting our insatiable appetite for debt under control, Congress is actually accelerating our spending. At this point, there is no possible scenario in which this story ends well. Meanwhile, the global financial elite are really starting to talk up the possibility of a new financial crisis. We know it's going to happen. I mean, it's the word inevitable doesn't even capture it. It is a certainty, absolute certainty. the storm clouds of the next global financial crisis are gathering despite the world financial system being unprepared for another downturn. The deputy head of the International Monetary Fund has warned. David Lipton, the first deputy managing director of the IMF, said that, quote, crisis prevention is incomplete, unquote, more than a decade on from the last meltdown in the global banking system. As we have put it, fix the roof while the sun shines, but like many of you, I see storm clouds building and fear the work on crisis prevention is incomplete, unquote. And according to CNBC, Janet Yellen is warning that we could have another financial crisis. We did cover that in the last video. Well, it's only natural. If the markets have peaked, we're seeing a correction, we see a 10% decline. The wealthiest of the wealthy, the elite, the banks, all of those individuals that are part of the 1% of the 1% have their fingers on the pulse. They're not dumb. They know what's going on, they know what's coming. And they like their comforts, they like their wealth, they want to keep it that way, they want to maintain it. And everybody knows the way to maintain and protect and hedge your wealth is going to be in vehicles like gold. So here you see gold price up as hedge funds snap 21-week bearish COMEX bets, Monday 12/17. Gold prices edged higher against a falling U.S. dollar Monday lunchtime in London as Western stock markets fell again ahead of key policy events in China and U.S. And hedge funds showed their first net bullish positions in COMEX gold futures and options since July, writes Atsuko Whitehouse at Bullion Vault. So Junius takes some time off, and during that time, gold goes pause, and I come back in one day, and the hedge funds are buying gold. Just kidding. They don't know who I am. I don't have those types of connections. Recovering from an earlier slip, gold prices edged above $1,241 per ounce as New York prepared to open, and the dollar index, gauging the U.S. currency's value versus 6 major peers, declined from the 19-month high hit on Friday. Gold becomes hugely attractive as other assets falter. Gold often has its day as an investment when other markets become dangerous. That time has come again. Asset classes, from equities to fixed income, from commodities to real estate, have been shaken by a slowing economy and worry that global trade disputes could mute GDP improvement worldwide. Gold already has rallied somewhat this year, but should move towards its 52-week high soon at $1,242 an ounce. It trades well above its 52-week low of $1,173 an ounce and below its $1,398 peak for the period. MarketWatch recently reported gold prices rose, quote, in the wake of a U.S. jobs report that did not meet market expectations on the key jobs growth component, unquote, said Jim Wyckoff, senior analyst at Kitco.com in a daily note. What is arguably the most important U.S. economic report of the month, the Labor Department Employment Situation Report for November, saw the key non-farm jobs number come in at up 155,000, which was well below the consensus forecast of up to 198,000, he said. Now, for about the last decade here on the channel, if we've been around that long, I don't know, not really, 2012, we've talked about gold flowing from the west to the east. A lot of videos on it, a lot of information about that. Well, now Mark O'Byrne has an article, says, and now to Goldman Sachs. We've always known the big banks and guys like Goldman, they like their gold, and they're taking positions in it. Gold is not only flowing from west to east, it is also flowing into the house account at Goldman Sachs, or at least the paper claims for it in New York. After holding it on paper, they're not holding it then. Below is the monthly report showing the large amounts of physical gold which have been steadily flowing through the Shanghai markets into strong hands in China. Few commentators are talking about this. What is less familiar, and what I have not read about much, is the very large amount of gold that Goldman Sachs has been taking delivery on the COMEX this month. Attached are a few of the clearing reports below. Notice that the big takers are the house account at Goldman and some presumably large customer at JP Morgan. What's up with that? The house account at Goldman and a large customer at JP Morgan continue to stand for the most contracts this month. 361,200 troy ounces of gold have changed hands in December. Well, it looks like the big boys are getting some gold, and that makes sense. They're going to have to hedge and position themselves if a downturn is coming, and they can prevent some of the losses, maybe secure some of the gains that they have seen and received over the last decade of exorbitant growth and bubble blowing. This, as Peter Schiff has termed it, many of you are familiar with the bailout bubble that we're still in, that was still expanding. That large influx of capital, it wasn't really capital, it was just, I guess, fiat. They just willed it into existence. It's been blowing and expanding and getting bigger. And well, when it does finally pop, because there was an article out today saying how every bubble is in search of a needle. When it does pop and implode and start to suck wealth from every single corner of the globe, every account, every investment vehicle, the only ones that will be impervious to such vacuous forces of this black hole of debt and destruction, this financial catastrophe, the only impervious item that can resist it and stand it is gold. Of course, and its little cousins, silver, precious metals. But definitely gold, the unit of account, the ultimate extinguisher of debt. It's going to prevail. It's like beating a dead horse. Obviously, if you come to this channel, you're going to hear that. My tune's not going to change. You're not going to log on to the Junius Maltby channel one day, and suddenly I'm going to be saying that anything contrary or different from my ongoing platform here, my baseline belief in what gold is, how it serves mankind, and its role in the global economy, wealth preservation, and where it belongs as far as in your hands or in your vault in your life to secure your wealth. So get some. If you don't have any, get it. I don't think we're going to see gold go very much lower. I mean, honestly. Think of the predictions we've seen. I mean, just let's touch on that for a moment. I know, we've kind of wrapped up the news right now. We're only 13 minutes into the video. I'll give you guys, we'll go a little longer. How about? Think of last year, the year before. I was getting a lot of messages, a lot of comments even. How many times I heard people predict and claim $700 or lower gold, $500 gold, $350 gold. Yeah, it got beat up. It got beat up a little bit. But what's incredible is during a decade of expansion and growth in the markets, a lot of people making money, did very well. It didn't. It never went below. And you've heard this before here. That 11. What did I say? The 1120, $1,120 or $1,220 somewhere, or $1,100 and something. It was got $1,100 mark. I think it was 1110, 1120. That huge purchase the central banks were really ripping in on back when India bought like 200 tons of it. And I've covered that. The reason that I believe that was the is the new bottom, and it's shown to be fairly accurate. I mean, we haven't seen sub $1,000 gold. Hasn't happened. How many times, how many people have predicted and claimed and called for gold to plummet below 1,000? Hasn't happened. And what I do think is going to happen is we're going to see it perform like that beach ball held underwater. It's going to get released soon and just come rocketing to the surface and pop out of it. There's just a lot of factors at play here. A lot of things beyond our control, beyond my knowledge. I don't know how these guys work the marionette puppets of the globe and keep things dancing with their hands on the strings. But I do know that something's going to change. There's something different in the world. It's palpable. You can sense it. You can see it. You can read it. It's in the newspapers. It's in the magazines. It's on the news. It's on the face of the working man you pass on the street. It's everywhere. You can see it if you pay attention. And all you can do at this point is like everything we've done before. Be patient, wait, do what's right, and be prepared. As always, I appreciate you guys being part of the Junior Small P channel, this community, if we can call it that. All of your support over the years, patience in bearing with me as I take leaves of absence at times, and I appreciate the ongoing conversation all of you do carry on in the comments. So thanks for being here. Appreciate it. Don't forget to like, share it if you can, or if you want to, share the video, spread the word, spread the message. And if you're not subscribed, please do so. Subscribe. And also, find me on Instagram. I'd like to do some more, or explore that platform and get a little more active on it. So let me know. Find me. Be well.